Good morning and welcome to this week's Credit Corner. Big topic today, man. I think a lot of loan officers and unfortunately, I know borrowers as well have seen huge drops in FICO scores. We're seeing over 100-point drops in credit scores right now. And the reason is student loans, right? It's an estimated 5.2 million delinquent student loans right now. And why is that happening all of a sudden? And the reason why is there was a 3-year pause on student loans during the pandemic, which is coming past, or has passed. That is over. That ended in 2024. But there was a 12-month grace period for on ramp, meaning helping borrowers get back to making payments. And what we're seeing this obviously early in 2025 are these things coming on, right? So we're seeing people that they're now reporting delinquent that are. So that's why that's what's causing these 100-point drops in credit scores. But what to do, right? And so first, I'm going to give you 3 easy things to do, and to be able to help kind of guide you as a borrower or you as a loan officer on what to help these clients. First and foremost, don't panic. Try to get current if you can. Contact your servicer. Start to work through. If you can get current, stay current on there, but don't stop there, right? Secondly, is look at what's reporting, right? Get a copy of all 3 credit reports, right? Get a copy of all 3 credit reports, and you want to review what is reporting. These things are going to be riddled with mistakes, and I'll explain a little bit later on why, right? 3 is once you have those all 3 credit reports, TransUnion, Experian, and Equifax, make sure you're looking at all 3. They're more than likely all going to have different information or can have different information. And that in and of itself is a great thing to challenge. But look for incorrect loan balances, payment due dates, payment dates as well. And also look for misreporting of a delinquent status. How long has that delinquent status been there? Student loans can be really confusing. You're net on a federal student loan or a federal loan that's insured by the federal government. You're never going to see a 30-day late. And a lot of times people are like, why? I have 90-day lates and 120-day lates, but I don't have 30 or 60. Well, they don't consider them delinquent after 30. So you're going to see these 90-day lates, but you can see discrepancies across the bureaus. You're going to see TransUnion saying one date's late and Experian saying something different. That means one of them are inaccurate, right? If you've got an inaccuracy, you have a reason to challenge. And if you've got a reason to challenge, you've got an opportunity to get a deletion. And that's one thing that we do here is we find mistakes, we use them as leverage to gain deletions, and we use the law as that leverage. So at Credit Law Center, we're going to pursue them legally if they don't correct or remove the negative reporting based on an error. But let me tell you more importantly why there are so many errors, right? So if you go back in the timeline and look what happened in 2021 and 2022, you had over 60% of the loans that were being serviced by servicers that are no longer even in the business, right? Some of these have been banned. Other companies have just chosen no longer to do it because of the amount of non-compliance was happening and the attention that was being brought to that. Navient, Fed loans, Granite state loans were the 3 largest servicers that are no longer servicing loans after 2021 and 2022. So 60% of the student loans were transferred to new servicers. That is going to be riddled and is riddled with mistakes, bad information, and information that can't even be verified in most cases. So that is the reason you've got hope to be able to get this stuff fixed quickly by challenging it in such a way that's causing them to do an investigation and catching them make a mistake, catching inaccurate information, incomplete information. The Fair Credit Reporting Act says the information's got to be verifiable in a timely manner, and has to be accurate. Not 98%, not 99%, 100% accurate. So missing information in and of itself can be enough to garner a deletion. So hope you find this information helpful. There's lots of resources out here for people. Best advice too is when you make that payment and get it current, start to ask for a payment driven repayment, right? It's going to be based on your income, not on your loan balance. And that's the best solution out there. You don't have to pay huge amounts of money to these third party companies that are going to just help you walk through that normal process. There's a benefit there for some people for sure, but you can do it yourself, right? So focus on that income driven repayment. And again, if you've got items on your credit report that are negatively impacting your score, reach out to us. That is what we do. We're the experts. We help people get mortgage ready, help loan officers close more loans, help consumers buy more houses. So hope you found this information helpful. Look forward to seeing you next week on next week's Credit Corner.